Hey everyone, welcome to SumZero again. We're back with Anthony Zhang, CEO and founder of Vinovest. We've done a number of calls with Anthony before. I think he's really insightful, and his product is making it easy for investors, both retail and otherwise, to invest in wine, to really kind of make wine an asset class, and not just the sort of thing that's only accessible to wealthy individuals. So Anthony, welcome back to SumZero. It's great to kind of have you back. And maybe to start off, can you just give us a recap of what you've seen of late or through the course of the year in terms of major developments in the wine market as well as whiskey?
Yeah. First of all, Divya, thanks for having me back. It's always really a fun conversation when we get together. And yeah, since we're nearing the end of the year, looking back at the world of fine wine and world of fine whiskey, um, we've really seen a few regions and a few sort of key developments happen in the market, especially amidst a very, very turbulent year to say the least. Um, Really, I think the main things that have been continuing to drive wine performance overall, why it's been up around 12% year to date, has really been the constrained supply. Given climate change has been a continuing factor, key regions like France have been hit pretty hard with both drought, forest fires, and frost in the midst of one year. It's led to really decreased supplies, and given that, especially when the market's not good, uh, for the better, for worse of society, alcohol consumption tends to go up in parallel with that. We've seen increased consumption, increased demand, especially for a lot of these fine wine regions that are, um, you know, are are producing less wine this year because of those climate change reasons. So think about regions like Burgundy and Champagne, and Napa as well. Those are all regions that have been hit pretty hard with bad weather, and are continuing to kind of struggle with dealing with climate change. On the whiskey side, it's a little bit less of a factor, just given that whiskey can be produced in more um, controlled facilities. The main thing is the lack of supply, given that people are really going for aged whiskeys, right? Things that are, maybe 15, 18, 20 plus years old. There simply just is not enough whiskey in the world that was produced 20 years ago, that's hitting the market. And especially as the sort of premium segment that I'm talking about is the fastest growing segment in whiskey. It's grown about 16% year to date. That's something that these distilleries, they can't go back in time, right? They really wish they could, but that's also what we're seeing right now is a supply crunch, especially for those ultra premium, really, 2 decade plus aged whiskeys.
And on the demand side, what's driving demand? Do you have any sense?
Really, I think a lot of it is just continued global interest in a lot of these brands that were previously inaccessible. A lot of these luxury brands have been working really hard to market to up and coming developing markets. Asia is still a big consumption factor and the fastest growing consumption market for both fine wine and for fine whiskeys, but also with the market, right? There's some interesting data that shows, at least during the last two recessions, when the market is bad, consumption goes from beer consumption actually goes down, wine consumption slightly goes up, and then hard liquor consumption goes up quite a bit. So
Yeah.
thinking about the psychology of the average retail investor, right? Like, yep, see your stocks taking a beating, you're going to reach for something a little harder than just the beer.
Yeah, what I wonder what this says about us as people, but either way, it's good for the asset class. So it's been, as you mentioned, a pretty crazy year. I think I was just checking the S&P 500 is down 15%. NASDAQ must be down like 25. Who knows? I mean, I don't know the exact number, but certainly more than the S&P 500. And you mentioned fine wine was up 12. Did I hear that right?
Yeah.
That's
Yeah, so
incredible.
according
So
to
that's
the LivX 100, which is kind of our industry's benchmark, the fine wine index that they track, which is a composite of the top 100 wineries, is up a little bit over 12% year to date.
And just for comparison's sake, do you remember what that index was up in 2021?
Yeah, I think it was up like over 15% through the entirety of 2021. So it's continued kind of the same trend.
Amazing.
That's part.
So it's been a crazy year outside of just the stock markets. And obviously, the stock markets often reflect what's going on in society and around the world. Between the collapse of FTX and some of the other crypto bankruptcies we've seen, like Three Arrows Capital, BlockFi, I'm sure you saw just filed for bankruptcy,
Mm-hmm.
as well as Ukraine war and just overall inflation. Um, are you seeing any connection between like just kind of what's happening broadly and how that might be impacting the wine and whiskey asset classes? Just curious if you could maybe reflect on some of the broader events and how they might connect to your world.
Yeah. So actually at Vinovest and at Whiskey Vest, over half of our users also hold crypto. So there's been an interesting link since the very beginning. I think, just with interest in alternatives and wanting something to balance the volatility of crypto with something very, very tangible and very real, like wine and whiskey. There's always been a link, and I think especially given a lot of the massive public collapses in these crypto companies, it's eroded a lot of confidence, right, for people who are very, very bullish in crypto last year and heading into this year. And I think a lot of people have just kind of finally hit their limit, right? This was their last straw, whether it be Three Arrows Capital, whether it be FTX or BlockFi. Almost every single time when these things happened, we see a spike in crypto-led deposits in our website. So I think a lot of people are just, they're looking to either cut their losses or they're just like, all right, I'm out of here for now, and moving into something that I think they can maybe not not have to worry about so much in terms of the fluctuations and the volatility.
So just on a technical note, does Vinovest custody crypto? So if I wanted to move, say, my USD stablecoin to Vinovest, could I do that, or do I first convert to dollars and then move dollars to Vinovest?
Yeah, good question. So we use BitPay, and what they do is they instantly convert it, and then they give Vinovest US dollars. So we don't hold any crypto, but it's an easy gateway for people who are holding crypto to not have to be like, all right, I'm going to convert my USDC to USD, then USD to then go into Vinovest. BitPay kind of handles that transaction, so there's no extra conversion and potential taxable event for the customer. So it kind of just saves them one transaction.
But what you're saying is you're seeing inflows from BitPay, and that's how you're reaching the conclusion that there are people moving money out of crypto and into wine.
Exactly.
Yeah, that's really interesting. Yeah, I mean, the difference could not be starker, right? Between a hard asset that you can not only see and touch but also consume, and also has especially with some of the regions that you guys purchase from, like, has hundreds of years of history behind it, to some of the crypto blockchains out there, some of which were created yesterday out of thin air. And so I think it makes sense that people would kind of, it's almost like, I've talked to some friends about real estate and land, kind of that became more interesting as well to a lot of folks because of some of the volatility in crypto, just as an antidote almost to crypto, and wine I could see as being somewhat similar. Though through you guys, much easier to transact in. So, and then what about just on the inflation front? I mean, it sounds like the conversations we've had in the past kind of still hold, that all the supply chain problems are just as relevant in wine as they are, in other consumer goods and autos and things like that. Are you seeing any less of an impact from supply chain as sort of supply chain improves, or are you just not seeing the supply chain improve at all?
So I'm not seeing too much of an improvement in supply chain. I think when we're looking at kind of like the lead times and shipping times, there's still the same sort of like post-COVID, COVID delayed notices that we're seeing from all of our all of our providers. So whether that is like the new norm that we should be expecting, these heightened prices, and obviously now we're in the holiday season, so they're even more heightened. Or if it's on top of that, a factor of a lot of the potential energy crises that we're going to be seeing in Europe as well, and people sort of holding back on shipping and being a little bit more more patient, or maybe forecasting future demand a couple quarters ahead to consolidate shipments. We're seeing a lot of ways where our partners are getting more creative, and looking for ways to just ship less frequently as well. And I think that's definitely a direct response to the heightened and elevated prices, right? Like first we thought it was because of COVID, then it's because of a lot of the inflation fears. Now it's because of the potential like energy crunch in the winter. So there's a lot of different reasons that I think have led to it's still continuing to affect the wine industry and whiskey industry in different ways.
And speaking of forecasting, what's kind of your latest thoughts on what 2023 might shape up to look like?
Yeah, I think 2023 will be much like 2022, but I'd say a little bit less rosy. It's definitely hard to have a super happy and bullish forecast for the wine and whiskey market when everything else in the world looks like it's also gonna be even more of a hangover than 2022 was. So I'd say like still we're expecting modest growth in both industries, just purely from a supply and consumption standpoint, because the global demand doesn't look like it's slowing down anytime soon, especially on the luxury segment. The folks who are drinking and consuming the wines are ones that are most well insulated from recessions historically. So we're seeing that the combination of dwindling supply and just continued strong growth in those luxury sectors being reasons that we'll still see growth in these wine regions. But I think like where we'll see growth start to stall is in this kind of like mid-tier wine segment, right? Wine that's maybe like around $30 to $50, considered a splurge for like everyday folks who maybe were just buying $15, $20 wines. I think they'll probably stop and maybe stick to the budget wines, whereas the people who are buying $100, $200 wines are still going to continue for the most part to do that.
So within the Vinovest like wine fund itself, are you guys tactically allocating more to the blue chip varieties for the following year, and kind of
Yeah,
getting
I think for us, like we've continued to really just allocate to the tried and true brands, especially looking ahead, forecasting next couple of years, we're probably going to be in that recession that everyone's talking about. And those are the most recession resistant brands, right? Those are the brands that, to your point, have been here not only for years, but decades. And those brands stay, and, whether it's up or down, people are still going to drink Macallan, right?
Yeah.
So that's what we're thinking of. And that's really our downside protection.
Now, if the Fed does pivot next year, be it in the first half or second half, and broad equity markets do recover, what would you expect to happen to the blue chip names in wine and whiskey if that were the case?
They certainly do lag behind rallies in the stock market. So I'd say give it like a 6 to 9 month lag, and we'll probably start to see that tailwind start to hit the blue chips, and probably even more explosively into the more like tier below blue chips, right? The more emerging market regions, the ones that were kind of fueled by a lot of the economic growth that we've seen in the last 5-10 years.
One thing that I think is worth talking about, especially in light of what happened at FTX, where you had this, rogue founder who just kind of went off and essentially, or at least has been alleged to have stolen, customer funds. He really cratered trust in the crypto industry. But I think for anyone who's in the asset management, business, trust is just such a critical component of the business model, and why somebody's going to give you capital to steward. And so, what can you say about just the way in which Vinovest instills trust with its customers? I mean, obviously, we're all adults and we understand that markets are volatile and there's risk associated with investing in any asset class, certainly wine and whiskey. But I'm just curious if you can touch on kind of how you guys think about instilling trust and making your customers feel like, or your investors feel like they're even if they're not taking custody of the wine, that they do own something real.
Yeah, I think it really all comes down to transparency for us, because we have the opportunity to be able to do that, right? Like, um, for example, every single case of wine that you buy is not Vinovest wine, right? It's Divia's wine, it's Braden's wine, right? It's Anthony's wine. We show people the location of every single wine that they have, so that, say, if you're going on a trip to Napa, you could probably make an arrangement to visit our warehouses, or going on a trip to Bordeaux, you could probably see our Bordeaux warehouse. On top of that, I think a key part of trust is like education as well. Most folks are coming to us being pretty new to the world of investing in wine and whiskey. And I think the more they can know about the market, the more they can know about how Vinovest operates, the more trust they can have. But I think, yeah, especially given a lot of the events in the market have really created trust, not in the wine industry, but in adjacent industries, there's definitely a ripple effect, right? There's definitely, the sort of need for customers to be like, hey, like, are all of my investments all right, right? Like, if I was hit by FTX, I would be looking at every single other place that I'm parking in money to make sure that that doesn't happen again, and be extra vigilant, right? So I think proactive communication, and as well as just having more out there, and having more opportunities for the community to interact with the team. Those are all things that we really value here at Vinovest. So, for example, on Thursday, we're hosting our first like CEO town hall. So I've invited all of our clients. We're planning an all hands meeting anyways to talk about what we did in 2022, what we did well, what we didn't do well, what we're looking ahead to for next year. So I was like, hey, let's just invite all of our clients. They probably appreciate this opportunity. Private companies don't really get to do the equivalent of like an earnings call, and thought this could be a pretty cool opportunity for folks to be able to get an inside look at what Vinovest is planning for the next year as well.
It's a great idea. So I guess just on, to kind of close, would you say what's on the horizon for next year in terms of the product, just the user experience, kind of what folks who are looking to join Vinovest, what can they look forward to next year?
So this is, really topical since we're thinking about, next year and planning. I think a couple main themes. Number one is leaning into more transparency and education. So a lot of folks want just better market analysis, better insights, better tools. So, we're really going to be beefing up those charting capabilities, looking at wines, what are the ideal entry and exit windows for each wines, and adding that additional level of detail into folks' portfolios so they can know when to exit, not just their entire portfolio, but specific positions and why we're thinking about that. Another thing is also, helping to combat inflation, right? So we're locking in a few long-term storage and insurance contracts as well to be able to lower our management fees moving forward. And that's something that, as we continue to get economies of scale and are managing more and more wine, we can continue to be able to lower those fees, because, compared to traditional assets, right, like 2.5% is pretty high. But we do have those real costs of, storing and refrigerating and insuring wine. We want to get that down to like what's a traditional asset manager model as well, and keep it pretty consistent across, the other assets that people may be investing in. And the final thing is just more control as well. We launched our marketplace feature, which is still a beta product for us, but we really want to lean into that, to be able to provide our investors and clients, as well as other participants in the market, more opportunities to be able to transact, given the technology that we built, the pricing tools, and we think that can just help to build a more transparent marketplace where more liquidity happens. So those are kind of the main themes that we have, and definitely leaning more into WhiskeyVest as well. That's been kind of a really, really bright spot for our business this year. Kind of a new product for us, but we've been learning a lot. Definitely been getting more into whiskey myself, so it's made it a fun new product line, so I can further my own knowledge, but also the market seems to be responding pretty well to it as well.
That's all exciting. I think certainly the fee reduction should resonate. Though I will say, if anyone's ever looked in the cost of building out a wine cellar in a basement, certainly far more than
It is
paying
not cheap.
management fee to Vinovest. Anyway, Anthony, that was really awesome. Thanks again for taking out the time and giving us a recap for the year.
My pleasure.
We will be in touch, and maybe we can join that company event on Thursday.
Absolutely. Thanks a lot, Divya. It's a
All
pleasure
right.
as always.
Take care, Anthony.